Today, Chris Dixon of the crypto-friendly VC firm Andreessen Horowitz says institutional adoption of crypto is a net positive. BlackRock's spot Bitcoin ETF becomes the first of those launched to reach $2 billion in assets under management. And Coinbase's chief security officer, Philip Martin, breaks down the company's role in many of the spot ETFs. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Digital currencies kicking off the week in the green, with Bitcoin climbing more than 2%, trading back above the $43,000 level. Now, at the same time, Ether also rising to $22.99, and the Matic token jumping to 81 cents. Okay, let's talk about the top stories. Andreessen Horowitz general partner Chris Dixon joined Squawk Box this morning, where he discussed the SEC's spot Bitcoin ETF decision. He acknowledged that crypto has been a controversial technology and said that any institutional acceptance, like these ETFs, is a net positive.
The specific ETFs, I think that'll play out for a long time. I think there's some discussion of the Ethereum ETF. I think this technology is inevitable. I think this is the future of the internet. So I think over time you will see greater and greater acceptance of ETFs and other kinds of financial instruments. So, but I think that will take time.
Dixon also argued that the death of NFTs has been exaggerated. The firm predicted in its Big Ideas for 2024 that the technology would become ubiquitous brand assets. Next up, BlackRock's spot Bitcoin ETF is the first of those launched this month to hit $2 billion in assets under management. Now, this doesn't include Grayscale's GBTC, which had nearly $30 billion in assets under management when it converted into a spot ETF post-approval from the SEC a little more than 2 weeks ago. According to the numbers that we reviewed, WisdomTree has around $8.5 million in assets under management, and ARK21 Shares has $604 million. The rest of the funds are in between those numbers. Last up, now that the SEC has approved spot Bitcoin ETFs in the United States, the Hong Kong Securities and Futures Commission reportedly received its first application for a spot ETF. Citing a local news outlet, Cointelegraph reported today that one of China's largest fund managers, Harvest Hong Kong, submitted an application to the commission on Friday, and that the regulator was working to expedite the approval process with the hope of launching the first Hong Kong spot Bitcoin ETF after the Chinese New Year on February 10th. Harvest Fund might not be the only application for these products, as several regional financial institutions have reportedly signaled their interest in launching spot Bitcoin ETFs this year. All right, for our main story, I had the chance to speak with Philip Martin, the chief security officer over at Coinbase, about the company's role in the spot Bitcoin ETFs now trading here in the U.S., and how the exchange is preparing for a potential uptick in crypto bad actors. Okay, so the Bitcoin ETFs are still a big story for the industry. Coinbase, of course, is a primary custodian for many of these ETFs trading here in the U.S. Can you talk about how important that new investment vehicle is for Coinbase and why you were the partner to go with for many of these issuers?
Absolutely. So we're the primary custodian for 10 of the 13 ETFs that have launched. And I think the ETF is a really important tool. I think it brings the ability for consumers to get access to Bitcoin if they don't want to own the actual coins themselves in a way that has less exposure to custodial risk. I also think that the process we went through with these ETF issuers was extensive, right? We have 14,000 institutional customers. The process with every single one of them is extensive and really speaks to the investments that we have made in our security program and security team since we were founded in 2012.
How much is custody for Wall Street and the security around custody a focus for Coinbase this year? Do you think that as we see more adoption of crypto and TradFi, there will be more security threats you'll have to prepare for?
I think it's a great question. Since the very beginning, right, Coinbase has been targeted by adversaries of all skill levels. We have successfully defended against and will continue to see attacks from adversaries ranging from North Korea all the way down to individual attackers out there on the internet. And I think the critical thing here is that the launch of the Bitcoin ETFs was actually not a huge shift in our overall security posture. We've been building this way since the beginning. We have, as of Q3, we had $114 billion in assets on the platform. And so we really see this as just another day of focusing on building the easiest to use and most trusted platform in cryptocurrency.
So Bitwise tweeted out the wallet addresses for its spot Bitcoin ETF holdings. It says that it's the first of the ETF providers to do so and pointed to it as a win for transparency. What do you make of a move like that? Is this something that more ETF providers and their custodians should consider?
It's an interesting and unique to crypto component of this kind of custodial arrangement. I think that transparency for consumers, for investors is always a good thing. I think in this particular case, people have to realize what they're seeing, right? Addresses on the blockchain absolutely contain evidence of cryptocurrency, but sharing an address doesn't necessarily prove ownership of those assets. Neither does it prove anything about the off-chain condition of any entity, whether it be an exchange or ETF issuer or whatnot. So I see it as absolutely a positive step, but certainly not an end-all, be-all of proving the safety or security of assets.
So now that these ETFs have potentially opened up a whole new wave of crypto interest, do you think it will also pave the way for a new wave of bad actors? And how should ETF investors trust that their investments and the issuers they're trusting with their investments are safe?
Yeah, that's a great question. So I can tell you from firsthand experience, the amount of diligence that these issuers have done is just extremely extensive. I think that as consumers think about cryptocurrency exposure, whether that's via an ETF or whether it's anything else, and really when you get down to it, when consumers think about the increasing role of the internet in their everyday lives, it's something I encourage every single person to do, whether they're a cryptocurrency investor or not, is really take a look at their online security posture, really make sure they understand what the signs and symptoms of common scams and common attacks on consumers are, and then really dial in on the security of their phone number and their email address. Those are really the two foundations for online security in this day and age. And focusing on those the same way you would focus on locking a credit report or on locking your house and stopping your mail after you go on vacation is the way you should be thinking about the security of those core assets.
What do these ETFs mean for the industry? And what's your outlook more broadly for 2024?
Yeah. I think the ETFs really provide a very interesting vehicle for consumers who maybe to date weren't confident enough to explore the world of cryptocurrency. I also think that they really should encourage more stable risk management and market infrastructure. Over the next year, I'm excited to see what will happen with these ETFs. Quite honestly, I think this is really a special moment for crypto, and one that I've been in this space for closing in on 8 years now at Coinbase. And if there's one thing I know for sure, it's that I cannot predict the future in cryptocurrency, and certainly not in market structure and ETFs. So I'm looking forward to seeing what's going to happen.
Going back to the other part of Coinbase's business, trading crypto directly, obviously 2023 was a comeback year for crypto, though trading volumes were low, but 2024 might be looking up. Are you preparing for more crypto investors to come back to Coinbase to buy crypto directly? And what should first-time crypto investors keep in mind for safety?
Yeah, absolutely. So we're always preparing. The ups and downs of the crypto industry are I think unique, at least in my experience, in that they happen quickly and with very, very little warning. And so the only way to really be successful in crypto is to always be planning for that next spike, that next crypto summer, as we call it. I think first-time investors in crypto, if they're looking for direct exposure, need to focus on, number one, who their counterparties are, who they're doing business with. Ensure that those counterparties have a track record and a reputation of doing things the right way. Two, I think those first-time investors need to take a second look at their online security. Need to make sure that they are focused on doing the right things, on using two-factor authentication, on the security of their phone number, their email address, so that we can then in turn do our part about ensuring that the consumers, once they come to Coinbase, assuming they choose Coinbase as their partner, will have a safe, secure, and easy to use experience.
Okay, that's all for Crypto World today, but we will be back again tomorrow, and we'll see you then.